someone can really evaluate a Dubai property, a UAE property before buying it? Well, we all go emotional, just look at the numbers which we are being sent by our agents. But do you have your own checklist which will not come in between your emotions before you invest? Remember, a property investments is a decade investment. Next 5 to 10 years, it will be an investment which you will be looking forward up to. So let's not do this mistake and follow a proper checklist before we think of investing in UAE. So number one, if you are buying a property in Dubai, first of all, you have to ask these three questions from yourself, which is what is the per square feet cost you are paying for that property? What is the rent you are going to get from that? And what's my real ROI, my real return after all the cost which I incur for the buying of property? So these three questions are the fundamental questions before investing in the property. Per square foot to check how much you are going to get the appreciation in next 3, 5, 10 years. Rent to see your cash flow if you are taking on EMI, or even if not taking on EMI, to check your rental yield. And what is your real return, to check exact the net yield, not the gross yield, because a lot of times we don't take in the cost of the maintenance and the service fee being charged by the developer or the property landlord. So let's see, let's take an example of JVC, which I feel is a very good area, a very good market to invest in. Since a lot of time we have seen a lot of data where it has been proved that JVC by far has given the maximum returns in the UAE market, in the Dubai market, for all the investors in terms of appreciation, in terms of rental as well. So if I have to say what is the per square feet buying price in JVC, let's say if you're buying a 400 square feet of studio apartment in JVC, and that's costing between 1000 to 1200 per square feet in the current market, you will pay, let's say, 400 to 600,000. Same way for 1 BHK and 2 BHK, depending on what square feet you're taking, and the price for that you will be paying as per the table we have given that. So in JVC, the price of buying is 1000 to 1500, depending on old building, new building, and many other amenities as well. In Business Bay, it will be somewhere between 1600 to 2200, and in Dubai Marina in the current times it will be 1800 to 2500 dirhams. This is average median line. It can go little up as well depending on the building. So now this is this per square feet exactly pricing for you? This you have to take first of all. So don't go for somebody's telling you a studio is for 1 million 600,000, a 1 BHK for 800,000. You don't need to go and check studio 1 BHK, because very smartly the landlords or developers would like to place even a 1 BHK can be made in 700 square feet nowadays, and some developers might make a 1 BHK in 1000 square feet. So you need to keep your unit economics, your fundamentals very clean. If somebody is telling you that your property is 1 BHK, you just need to ask what is the square feet area which I am getting, balcony versus built up. So this also you have to keep in mind, and that's how you will calculate your price. Now moving on, if we have to check the annual rent, so typically annual rent in a JVC market would be for studio 35 to 45,000, 1 BHK 55 to 75,000, and 2 BHK 80,000 to 110,000. This is an average rent, and again, as I said, studio would be around 400 to 500 square feet, 1 BHK would be 700 to 900 square feet, and 2 BHK would be somewhere around 900 to 1200 square feet. So you need to keep per square feet in mind and calculate your buying price as well as your rental, how much rental you will be placing on that. So is as per these numbers, your studio will give you a gross yield of 8%. A 1 BHK would give you almost similar 8.1%. A 2 BHK would give you 6.8% yield. Now, if we have to calculate the other cost which comes along with buying a property, would be property prices, let's say 800,000. DLD would be 4%, agent fee 2%, registration plus miscellaneous cost from trustee office would be 5,000 dirhams. So your total investment in a 800,000 unit would be 853,000. Now, if I have to calculate what rent you will get on this unit, would be 65,000 or 60,000. Service charges you will be paying, let's say 10 to 12 per square feet, so it will come around 10,000 dirhams. maintenance 3000 dirhams. So what is your net annual income? Is 52,000, which is basically 6.1%. So this is your net yield, which is again a good yield, not a bad yield. Comparing it to commercial, we can get up to 10% as well. But in residential, this is indeed, after all the cost, a good yield. We have not taken again the property management cost in this. If you are giving it to a broker, you can cut down 0.5% more, so it will be around 5.5%. Now comparing it to other asset classes, like if you are putting your money in FD, you will grow at 4 to 5%. Here you are getting rental ROI itself for 6% plus the appreciation of property. So that makes the asset class very, very fruitful. And again, if you're taking on mortgage, you're not paying the whole money, you're taking the leverage benefit, you're taking 20%, you're paying 20% to the bank and getting a property worth 800,000 or 1 million, whatever it is. So that leverage also creates a lot of wealth for the investors. Now, if you have to buy property, again summarizing up, you need to ask and check these numbers. What is your price per square feet? Is it above the average in that area, or you are paying a premium? And there are many tools, very open transparent, land department data and many other platforms are there, where you can check your price per square feet is above the area average or below the area average. Now, next thing, your gross yield should be 7% and your net yield should be 5% minimum. So you have to keep this in mind. Even if, let's say, you are checking in the area of JVC or Marina, if the whole area is right now inflated and you're paying a much higher premium, and then your gross yield is very less, say let's say 4% or 5%, then you should not go ahead and check for any other area, because there are multiple areas where you can get this benefit. Now your service charges again should not exceed more than, I would say, it's written here 12 square feet, but I would say it should not exceed at best 18 per square feet. Developer track record, this is very important. If you're going especially in off plan, then this is more suggestible. When it is secondary, ideally we are checking, we are seeing the property as sale, the maintenance, we can ask the people around there and we can get better idea. Exit buyer, so those buyers who want to exit, who have bought the property and want to exit in 3 to 5 years, should make sure that the area is under momentum and you will be able to easily sell and you will be able to get your liquidity back. So exit buyers should keep this in mind. Capital appreciation, area still growing or already peaked. This is again very important. That is this a growing area like Dubai South, JVC and many other areas? Is this part of that? If you're an exit buyer, especially, you're not looking for a long, if you're not looking for a long-term investment, let's say 3 to 5 years, then this is very important that you should be betting on a momentum area which is continuously growing. So this is all. Thank you for joining today. Remember, every property decision start with numbers, not with your emotional view. If you like today's session, comment on our YouTube channel. This will be live there, on my LinkedIn channel. And if you have any question, any problems, you can always reach out to me. Thank you so much for joining today.